Hello, Baker Finance students. I hope everyone had a great weekend. Great job, everyone, on the discussion with Dunkin' Donuts, and kind of got a little bit of insight as being an analyst. That's part of what I want you to do. I want you to get out of this class too. Is if you were to pick a company or evaluate a company, is trying to interpret what the leaders are saying, what the financials are saying. So in corporate finance, we're a big believer in fundamental analysis. So that's what you do at this level. And interpreting, what does this mean? Again, there's no guarantee of future results for any investment or any company, but you try to gather as much information. And as you saw, the market reacted to the news that the leader of Dunkin' Donuts put out there and the drop of the stock price. So we're going to continue that this week. This week you're going to read chapters 4, 5, and 6. Chapter 4 looks at the financial ratios. In fact, your forum discussion, I'm going to ask you this week to go out and, based on the company you selected in week 1, giving some instructions there to go to Yahoo Finance, type in your ticker symbol. You'll go to company, and underneath company you'll see key statistics. So I've listed in the forum discussion certain key financial ratios I want you to include, along with some other statistical data like beta and market capitalization. Give a general overview of how it did with these ratios and use your textbook to help you with that. And then go out and pick another company that's comparable. So, if you were doing an airline, Delta, say, versus Southwest, how did each company do? Which one maybe in your opinion did better? And then just make sure, get the initial post by Thursday and make your response to at least 2 of your peers by Sunday at midnight. So we'll continue that with a forum discussion each week, and you guys are doing a great job, so just keep to jump in there early and get things done. You'll do great. This week, in addition, you have your first homework assignment. So what I'm going to do each week is I'm going to put a partial key out there, so notice in week 2. I give you the answers, but it's up to you to show me how you arrive at those answers. And if you do have any questions, just do email me and let me know, and I'll guide you through it. I also put out there in week 2, kind of how to work with word problems, because that's a lot of what finance homework problems are. I feel confident you can do the math. It's just understanding a lot of times is what are they asking and how do I set this problem up. And that's a skill set you're going to get out of this course too, especially with a lot of financial calculations you'll do this week. So with that, your first homework, even though it was based on the previous week, is due this Sunday. And the following week, you'll have those due from 4, 5, and 6. And next week, I'll put a key out there for those chapters too, so you can check your answers as you progress. Okay, so for addition this week, some other items. Just want to kind of talk about the chapters themselves, the financial ratios in chapter 4. You've probably been exposed to this perhaps in an accounting course. I remember my undergraduate days, it was like the 14 financial ratios, but they look at performance, liquidity, how the company is managing its assets, management performance. So it's our first initial benchmark, and we get these financial ratios from both the income statement and the balance sheet. In addition, in the forum discussion I put out there too that your Baker University Library has some great resources already set up for you that can help you with your analysis of your company project. So I've inserted a link in there that you can go out and find information for your company if you choose to do that for your financial ratios in the forum post. And you should use it too for your project too to help you. So with that, also remember for the forum discussion, just make sure to cite anything or anything that you got reference material for, include that in your post. Next is really the time value money calculations. This is what I call the meat and the potatoes of week 2. We need to be able to perform financial calculations so it can help us make better decisions. And I think this is a good skill set to have too, because it helps you make better personal financial decisions, whether it's relative to opportunity cost, or if I'm going to have enough money saved for retirement, or should I buy a car or lease a car. Corporations have to make these same financial decisions. Ultimately, the goal is to maximize cash flow, to maximize the present value of the company, to give the stockholders an increased return in wealth through a higher share price. So if management's doing all the right things, it's got a product that people want, the company's stock price is going to go up in value. If you're not doing the right things, the market's going to see that, and they're going to reflect that in the downward price of the share. So you're going to look at such things as first just kind of the what I call the basic time value money calculations. As long as you know 4 out of 5 of these things, you'll be presented with present value, future value, number of periods, the interest rate, and payment. And as long as I know 4 out of those 5, I can calculate the 5th value. I put an example video out there, although it's from another textbook. The concept's the same. Go through the textbook too, make sure you understand the concepts. I like to look at it this way. I want you to really kind of understand the math first, and then once you understand the math, you may be able to go to use the tables, but the tables don't always give us the exact answer, so that's why we have to use financial calculators. For my course, I like to use Excel for examples, and Excel is going to get it exact. The one thing I want you to think about when you use Excel views it from any time that you're investing. That's a negative cash flow. So if you bought a CD for $5,000, the present value would be a negative $5,000, but the future value would show up as a positive amount at some point in the future. So go through those examples, make sure you get comfortable with them, read that chapter a little bit more slowly, and if you have any questions, do ask. And then finally, you're going to look at bonds. A lot of Chapter 5, the main thing you need to understand first is present value. If you have that down, you're going to do a good job with present value. But next, Chapter 6, it looks at pricing bonds, and that's really just the price of bond is the present value of future cash flows. So we discount all those future cash flows back to today. What is it worth to me today? There's another thing you're going to be looking at, which is called yield to maturity, which is the rate of return if you purchase that bond, whatever the market price is. So, bonds make up a large percentage of companies' capital a lot of time. It just depends how they're financed. It's not as publicized much in the market. What we see a lot of is about the stock market, but trust me, there's a lot of money out there in bonds. And right now, bonds haven't done so well, corporate bonds, because just that the potential of interest rates going up and overall interest rates are low, but that's kind of that concept of inverse relationship, that if rates go up, the present value goes down. So that's going to be kind of driven home in that chapter. Make sure you're comfortable with that concept. But it's also going to discuss current yield. I want you to think of current yield as just the interest I received this year divided by whatever price I'm paying for. And that's oftentimes what's quoted in the paper is current yield. But ultimately, from an investor standpoint, we understand yield to maturity, because that's something we're going to use later in the course when we calculate the true opportunity cost for the company. So we'll continue to jump in this week in the forum discussions. Send me an email if you have any questions. But otherwise, enjoyed talking to you all online, and look forward to doing again the same thing next week. Take care.